You're now tuned in to another episode of Juicy Gems, your go-to podcast for everything related to the world of stocks. Discover new trade ideas, current stock market trends, and option trading tips, exclusive interviews with other successful traders, and so much more. Let's go! Welcome to Juicy Gems. Now with your host, Xavier the Master Trader.
And before we get into this, again, everything I say is going to be recording. I'm going to be using these spaces for some YouTube content that I'm creating, so it doesn't matter who's in here, who's not. I'm going to be putting everything on YouTube recorded. So if you do get the chance to speak, if you are going to speak, please note that you will be recorded. Next, as we get going into this, every speaker, everybody will have a topic. Every speaker that comes up will have time to speak on the topic, and after everybody speaks, we're kind of just hanging out watching the market. But as we get into this and as we get rolling with this, guys, please note that everything that we do say is for educational purposes only. We are not advising you to do anything. And with that being said, I'm gonna just keep it moving and jump right into it. Trading. Title of this space is the grind of a trader. Okay, and with being a trader, I have another hobby outside of trading, and that hobby is bodybuilding. Right, I'm not the biggest dude in the room yet, because when you talk about bodybuilding, you assume the person talking about it is like 6'5", 280, 5% body fat. In the same way somebody would assume that if you're a day trader, you just push buttons all day and you make a lot of money and you drive a Lamborghini, right? There's a lot more that goes into making that happen that most people don't see. And what I really wanted to do is get together in this series of spaces. And again, as I'm working on this series of spaces, I will be recording these and putting this on YouTube. So if you have a problem with that, don't come up and speak. But pretty much everybody else that I've seen is coming in here is pretty solid with that. Now, the focus is what goes behind the face. Anybody ever see as a picture of a mountain, and on that mountain it says success, and then there's some water, and under the water, you see self-doubt, hard, difficult situations, and there's a lot of things to make that happen. Just want to let you know, first things first, as my other hobby, trading is a life of delayed gratification. Just like in the gym, you go to the gym, you just get started today. When you walk into the gym, you're going to look around and you're going to see people in shape. Most gyms, right? It depends on where you're going. But if you go to one of these normal gyms, you're going to see some people in shape, some people who have just started, some people who are not in shape, and some people intermediate. The first thing that we do as traders when we get into the game, the same way a lot of people when they get into the gym, the first rule and the first thing they end up messing up on is they start comparing themselves to others. Never do that as a trader, because the same way in bodybuilding, the guy that's 6'5", 280, 3% body fat, he's been in the gym for the last 13 years. He's dieted correctly. He's put in the work and earned that right and been through the grind that we're going to talk about here. The same way that you have to go through your own personal journey and to never compare yourself. For me, my journey was trial and error. Everybody has their story. Here's my story. 4 accounts blown. One of the accounts was money loaned. Crazy. And for me, I had to lose 2 accounts to understand that there was a lot more to becoming successful than just sitting back and just waiting for things to happen and pushing. So the grind of a trader never stops, even to this day for me. And it's going to include things such as backtesting. Backtesting is every time I speak, I'm always speaking on the fact that backtesting is your practice. Backtesting is your area for you to become acquainted with your trading plan. People who hesitate trading, they don't backtest. So if you hesitate, meaning you see an entry and you say to my guy, should I take this or not? That just tells me you're not backtesting. I backtest so much that sometimes I dream about candlesticks. Seriously, I go to sleep. Literally, one time I went to sleep and I had a dream of this green candlestick going up the whole time. Just how much I'm behind the chart, because backtesting is the answer you're looking for. Success is on the other side of the work you do not want to do. Now, this means hours of backtesting. Why? Even if you're profitable, even if you're successful, you should still backtest. Why? Because in trading, it's not only is it a part of the grind, But trading is an emotional journey, and no matter how experienced you may become, you can easily tilt. Easily tilt. Easily. And what I mean by tilt is you take a loss and then you do a series of bad decisions to try to make that money back. Anybody can tilt at any time in their career. But if you backtest, it'll keep you in line with your plan. It'll keep your emotions in line. So what's grinding as a trader looks like is hours backtesting. When somebody says something to you on Twitter, go backtest it. Don't try to trade it because quote unquote ICT trading, Billy Bob or supply and demand guy, Forex dude, go backtest everything that they're saying. And if you can't get a winning ratio, which in my opinion, the thing that everybody should be grinding for is at least a 60% win rate on a 1 to 2 R. Can you get better? Yeah, you can get a lot better. But that's to be your median as a day trader, 60% win rate, 1 to 2 R. And I'm telling you, if you can do that, you're making a lot of money right there when you go live if you can follow your plan. So the first step is grinding as a trader is to continue to backtest. Problem is that most of us have lives outside of trading. When you get into trading, a lot of times we don't have circumstances. We don't have a lot of extra money. And more importantly, we don't have a lot of extra time because learning how to trade takes a lot of time and it takes some money because you're going to have to put yourself into it. So I would encourage you, even if you don't have money, as long as you can find the time, I'm going to say it. I'm going to say it. Don't go to the club on Saturday night. Don't watch that Netflix show. Don't go circle jerking with your friends, whatever y'all be doing. Eliminate all the BS and go straight monk mode. Straight up, buy a course, find a YouTube channel, and go monk mode in the back testing. That's the first part of grinding, and that never stops for me. Next part about this is the trade review process. 3 things: back testing, forward testing, and trade review. That's how you become successful in this game, and there's a never stop ending. Now, what's forward testing? Forward testing is saying, look, I don't back test it so much that I feel good about the market. So I'm either going to trade the market small live or I'm going to get on a paper trading account and see how things go. That's forward testing. And lastly, on this part is consistency reviewing your trades. So here's how I became really profitable. Here's how I took it to a whole different level. Everybody should open up their own Discord and have another software called Trader Sync. In this Discord that I want you to open up, I don't want you to invite anybody in there, just you. You in that Discord. I want you to have a couple channels. Channel number 1 is going to be called backtesting. When you backtest, you put your results in there and you put a bunch of screenshots in there. Channel number 2, out of the trades that worked on your backtesting, call this channel Edge. Trades that fit your edge, put it in this channel and visually see it. Next thing I want you to do is have another channel called Live Market Action. As candlesticks are printing and you're thinking things are going to happen, screenshot your screen and put it in this Discord and start writing things down about what you think is going to happen. Next one is going to be called Winning Trades. And of course, obviously, you're going to put your winning trades in there. Next one is to be called Losing Trades. Obviously, you're going to put your losing trades in there. Now, what happens is you have all these channels. You go back and look at the Live Market Action channel, and you go back and look at your Trade Edge channel, and also have another channel there is called My Perfect Model. So on TradingView, get the path tool and draw the lines out of your trading model, and then find your best winning trade that aligns with that model and have it there. Every day before the market opens, review that. Every day before the market opens, with every losing trade that you've taken in this Discord that you've created, I want you to analyze everything that went wrong and spend a lot of time reviewing what went wrong. If you do this, because trading is a tweaking process. The easy part is the charts. The hardest part is tweaking it and getting over the emotions. I'll say this again. The easy part is the charts and entering the trade. The harder part is tweaking your strategy around you and your emotions. That's the hardest part. And if you have a channel that's just designed for the losing trades, and you spend time watching those errors and correcting those errors as they're happening, and then spend more time reviewing the winning trades and what went right. I'm talking daily. Like you might wake up and 20 minutes before this market is open, you do this. You will stop making the same mistakes. If you don't do this, maybe you go 2-3 weeks without doing the mistakes, but they will always come back at some point. And this is why I say when you backtesting, stay with backtesting, it eliminates you from making stupid mistakes. It makes you calm. When I come into the market, if I can't hit a trade today, or if I miss a trade today, I laugh at it and say, ha ha, I'll catch another one, because I know the backtest is so much and I know my win rate that I'm going to catch something this week. That's my mindset coming into the market. There's no fear, there's no hesitation. I've backtested. Just like if I'm going to go on stage for bodybuilding, I've been eating right, working out, doing cardio. I'm anxious to take my shirt off. Let's go ahead and let's do it. Same thing with trading. I'll open this market, give me my liquidity sweep. Where's my inversion gap? I'm ready to go. And if you're not like that, you need to do what I just told you to do. Now, I got a lot of speakers that just popped up. I can go on and on and on and on. And probably on the back end of this space, I'm going to continue to go on and on and on and on. But I'm going to let some other speakers speak. Love to have, I got a lot of good people in the crowd. First things first, I just want to go ahead and bring up one speakers. Trey, I'm going to throw it to you. But before I go ahead and go, now that we have more people coming in, guys, man, Trey's a friend of mine, very good trader. Go look at his profile. Very good trader. I'm surprised he don't have a lot more followers. Let's go ahead and try to get his following up. Be sure to go ahead and follow Trey. Besides that, the floor is yours. We're just talking about the grind of a trader, what you go through as a trader, and how did you shape yourself to become the trader you are today. Besides that, the floor is yours, bro.
Appreciate it. Appreciate it. Yeah, man. I've been following Juicy. Actually, he probably didn't know I changed my Twitter name, but I followed Juicy back in like about 2 years ago when I was on Twitter following a few other people. But I started out my journey. I started like 5 years ago, but I started taking it seriously back in March of 2021, and I bought a course called AMU through Aristotle, like the Honey Drip course. Then I learned about EMAs, MAs, RSI, Bollinger Bands, MACDs, all of the indicators and stuff like that. But I found it to be too much noise for me. So I tried to dabble into Fibonacci's and try to like have a cleaner chart and use the fibs to trade. That didn't work for me. Then I gravitated towards a strategy just support and resistance. It's just straight horizontal lines on the chart and break and retest sort of. But I didn't have enough screen time at the time. So it worked, but it was very 50-50. Like I didn't know why my trades didn't work when they didn't. And I just kind of like got happy when they did work. So after that, um, I found some consistency of, as long as my risk management was good, I was still profitable. So I became profitable in 2022, early 2022, like consistently profitable. I was in the military in the Navy for 7 years, so I made more than my Navy check February, like right before my birthday, January. So at that point, I told myself, okay, I can try to pursue this full time. Somebody mentioned to me futures maybe in June of 2022, and I was already trading mainly SPY and QQQ options. Switched over to to the NQ and ES, and I traded ES for maybe about 6 months before I swapped over to NQ because of the volatility that I liked in it. And during that time, I tried to learn ICT. So when I first started to learn that, I found out early on that the draw on price was the most important aspect of it. So everything else, the opening gaps and breakers and order blocks, like they can be helpful, but they're just as useful as a EMA. Like if you use an indicator, if you know how to use it and like the time to use it, like everything works. But the problem that a lot of people have is they just use it and then they don't know why they're using it. So my strategy now is simplistic. It's just key levels and the imbalances of price. So I will go like get in the charts, identify my draw for the day, understand like are we in the bullish sentiment of the market or bearish, and I will trade within that direction. So when I'm trading in a direction, I'm very one directional on price because I trade where that draw is at. and that's how I'm typically able to catch 200-300 point moves because I'll get in on the reversal of a leg down on a bullish trend and on a leg up on a bearish trend, and I just ride the wave down. So that's pretty much been my journey as of as of late. The last 3 years have been really good for me, and like Juicy has said, it's just like the gym. And I mean that's a great example because a lot of people get in and then like they'll follow you and then they'll say, well, I want to make $10,000, but it's like you know I've put in 16 to 18 hours a day back in 2020, March of 2021, for a whole year. I was on the chart 16 hours a day, whether it was during the market hours or after the market or just back testing itself. Because that's the only way. I don't care what nobody says. That's the only way that you'll get better is with screen time. Like that can't be taught. Everybody can teach you inversion gaps, fair value gaps, breakers, block, whatever they want to teach you, but they can't teach you screen time.
100%, brother. Hey, first things first, like I said before, I'm just hitting mute everybody because that's somebody with some background noise. Couple things he said. Me personally, I am a ICT trader, and I'm going to go ahead and throw it to on comment after this. So throw it to you here in a second. But yeah, as an ICT trader or anybody that's using smart money concepts, the draw of liquidity is everything, man. Like a lot of people try to just get into any trading strategy and they don't understand the edge of the trading strategy and the smart money concepts, the DOL. When you know the price is likely to go, everything clicks, right? And that's the downfall of the strategy. If you get the DOL wrong, which I have many times, you're gonna get burned, right? So big shout outs to Trey. Love everything he says. The one thing I want to compare and just tag along with that, he said one thing that's very important. He said screen time is everything. So one other hobby that I am doing outside of bodybuilding and boxing, I go to the racetrack. I do it. And one thing that a lot of people look at is just saying, hey, it's just driving a car in a straight line or just driving a car. I drive a car every day. It doesn't prepare you. The only thing that can prepare you to get on there and actually go full throttle is being behind the steering wheel. More time you get behind the steering wheel, the faster you can drive that car. So again, screen time, again, take the note, screen time's everything, and you can voluntarily add screen time in your free time by backtesting. And yo, literally, the answers you're looking for in trading is on the other side of backtesting. I promise you there are. But besides that, we're gonna keep it moving. Appreciate you for coming up, Trey. Be sure to give him and all my other speakers a follow. We're gonna go through and find and talk to a good friend of mine on Common. Common, how you doing? We're talking about the grind of a trader, some of the steps that you may have taken to get towards the trading trader that you are today.
Hey, Juicy bro, was good. I'm actually in the meeting right now, yeah. So I'll join you up soon, all right?
Yeah, stay here. You can stay here, keep your profile up. We'll keep it moving.
All
Just
right.
make sure you stay on
Hello,
mute, brother.
Emmanuel, and hello, Eddie.
I want to just make sure everybody's muted. All right, we're gonna keep it moving. We're gonna throw it to Fairy Trades. I'll try to pronounce your name, but I feel like I will butcher it. Question is for the panel. Again, maybe because you're newer to this side of the futures world. Just let everybody know your name and how you engage with price and what you trade. But the real question is, what are some of the steps you had to go through during your grind to become the trader that you are today?
Thank you, Joseph Trades. Good afternoon, or okay, good day to all the speakers, the co-hosts, and all of the listeners. What are some of the steps I had to take to become who I am today? Quite unintentionally, right? Journaling helped me a lot, and I didn't even get to know. Okay, yeah. I got to hear from somebody because I write about my trade, maybe just randomly in a book or something, until someone told me about Notion Journal, where you can save the picture of your trades before and after, right? You can save the picture of your trades before and after in your journal. That's on Notion, and that has really helped my journey. That has really helped my journey into becoming who I am today, because currently sometimes I don't even have to backtest that much right now. If I'm backtesting some other details about my strategy, not if it works or if it doesn't work. More like the time it happened, the risk reward ratio I got on it, and some other details. Not much about the strategy itself anymore. Then for the discipline part, that's the unintentional part, because aside having to just sit at home and trade, looking at the chart and all of those things, I was locked in. I wasn't doing any other thing else. Then I decided to start working out, just as a means to, stay fit or something. And then I registered. But I didn't start working out because of trading. But somehow working out helped my trading journey, because sometimes if I make mistakes during my trading, let's say I FOMOed into a trade, or I was reluctant to take a trade, or I closed early. When I get to the gym, I find myself beating myself up while on the treadmill or something. I'm trying to like take accountability. I'm just there in my head, you know, telling myself when I'm back here tomorrow, I must have done better. All of those is happening in my head while I'm working out, literally in pains, and beating myself up for how I performed that day. I go to the gym in the evening, not in the morning. So I go to the gym after my trading day. And that really helps with my accountability. It helps with my discipline. And then it helps just it helped um to sharpen my execution skills and psychology. That was not intentional, because it wasn't because of trading I started working out. It was just that working out helped my discipline, it helped my psychology, it helped me take accountability more. Until this day, those two things, including backtesting anyway, because I wouldn't, there are some traders that don't like to pay the subscription. They don't like to do the trading view subscription because they think it's irrelevant. I mean, I was probably one of those before, until I knew that, okay, you know what, you have to invest in this skill. If you really want to make money off this thing, then why would you not invest in it? I mean, it makes no sense to want to make thousands of dollars or change your financial life and you are not going to invest in it. So trading view subscription is like one of the least of the investment you can make in this your trading journey. So I did that and I sat with it, back tested, journaling. I mean, looking at my journal, there's no doubt how much I've grown. I could just look at my journal and say, oh my God, so this was where you were in 2022. See the rubbish you're doing, see how you're marking your chart and all of that. And having the before and after chart on my journal makes reading my journal, going through my journal a lot easier for me. I just go through it and then I make sure that no matter how bad, like no matter how tired or whatever it is, I go through, I make sure I update my journal. I make sure I update my journal. Then quite recently, the one thing that has helped me recently is this, what's it called? At the end of every day, I try to, even if I don't take the trades, I go through the pairs I trade to look for where my strategy played out. Because at some point, I was a bit confused. Is it that I don't have an edge, or is it that I'm the one not executing my edge? It's quite a very tiny line, because if you don't see it play out, let's say you've not taken a trade in 2 3 days, you just might be there thinking it is you're taking losses. You just might be there thinking it's your hedge that has a problem. Meanwhile, that same strategy is playing out on other pairs. And even if I'm not taking those trades, I try to make sure that at the end of every day, I go through all the pairs to see, okay, did my strategy play out anywhere? Now this builds my confidence to know that it was a me problem, not a strategy problem. I mean, I'm the one not taking the right trades. I'm the one not looking at the pairs I should be looking at. I'm the one who chose the wrong pair to trade. I'm the one who made the mistake and all of those. So being able to tell, being able to tell that my strategy actually works, I'm just the one not milking it as I should, gives me this confidence that it's me problem. I don't have to change my strategy. I don't have to look for what isn't missing. I just have to improve on my execution. Or it's me. There's still money to be made. Not like there's something wrong with what you're doing. It's just that there's something wrong with how you're doing what you're doing. You need to adjust. So having that in black and white gives me this sense of encouragement that I need. I don't need anybody to tell me. I mean, there are some things that it's just you. Nobody's going to tell you you're going to make money off this thing and all of what you're doing works or something. Being sure that what you're doing works is going to be from the work you put in into finding out if it works. It comes from the data you're collecting, basically. And my data is in my journal. I mean, taking note of these little details actually really helped. Then when it was time to scale up, the 10 traits challenge, I don't know where I had the 10 traits idea from first, but I knew that sometime early last year or thereabouts, focusing on 10 traits at a time, say, okay, you know what, I'm going to be risking this particular amount on the next 10 trades. So it doesn't matter if I lose the first two or I lose the first three, I'm just going to execute this particular risk size on each of these trade. So I'm depositing this amount on this account, and then okay, this was how I did it. Let's say I wanted to risk an amount on 10 trades. I'm going to fund the total capital for that 10 trades on the account. I used dairy for it anyway. Then I transfer the stop loss size, the risk size for each trade to the trading account per trade. So I just look at whatever it is on stake, whatever trade it is on stake, and then I execute the same risk size on the 10 trades. And that particularly changed my game a lot. It changed my psychology personally. And then it helped me to just put a lot of things in perspective. Because in trading, you have to be the one to figure out your problem. I mean, we can't wait on somebody else to tell you what your problem is or the solution. So I think the idea of me journaling, making sure everything is documented, knowing that okay, this problem is it my edge or is it me? At any particular point in time, I can tell what the problem actually is. Taking accountability of what my problem is. Is it me? Am I the one doing rubbish, or is it that the market is the one not giving me what I need? Yeah, it puts it in perspective. I don't find myself blaming what is not wrong for what is wrong. I mean, when you get to shift blames or blame what is not wrong for what is wrong, then you look for solutions in the wrong places. You're trying to fix something that is not wrong, right? And that actually makes the journey a lot longer, like the journey to profitability a lot longer for a lot of people. So making sure that you're not blaming the wrong things, you're not blaming something else for what the problem is something that really helped me to be able to like find out what exactly it is that is wrong and fixing it as soon as I can. I mean, these are the things that helped my journey personally. For me, these are the things that helped me.
I appreciate you for coming up and saying that. Said a lot of cool things here. I just want to highlight a couple things. First things first, you'll notice that the majority of people who are successful in trading all say the same thing. It's a gym membership. And what I truly believe what that really boils down to is the fact of the matter of delayed gratification. Like you go to the gym, let's say you work out, you get sore, come home, look in the mirror, you look exactly the same. Same thing with trading. You don't really have anything to show for it until you get to the other end where you're making payouts or buying cars or buying houses and things of that nature. But there's a lot of work to get to that place and to that milestone to get there. But in the meantime, on the outside end, you're doing all this stuff like in the gym. You're sore every day, but you keep showing up. And that's one thing that I really like that you said. Another thing that I like that you said was writing things down, and I said this earlier too, in a similar way, but writing things down about your trades. I would go even farther to say is you should write down as much things, as many things as you can about your trades, and on the trades that you do have, you screenshot, you should annotate so many things. Just annotate everything and write about what went right and what went wrong. And indirectly, one thing that you guys should take notes from, and she's like, I was comparing my trades from years ago and looking at the rubbers I was doing between now and then. That is a trade comparison process to see how far that you went up. So all great things there. Be sure to go ahead and give her a follow, guys. Appreciate you for coming up, and I really appreciate you for coming up and speaking. So that's that. We're gonna keep it moving. We're gonna leave the futures world in the forex world a little bit and go to my man's the sex trading. Guys, the sex is one of the best swing traders. Him between him and Charting Bot, probably two of the best swing traders you can find on this app. Be sure to go ahead and give them both a follow. But besides that, we're gonna go ahead and throw it to you. How you been? And the question is, wanted to hear a couple of things that you had to go through. What was the grind like, and what made you? What really shaped you into the trader you are today?
Hey, Juicy. Hey, everyone. Yeah, no, that's a great question. And I think you brought up a lot of great things in the beginning, right? As far as like a gym membership or even, just it's like every day. The market is different every day, right? You have to understand that, right? So you might have anticipated, you might be long, but for that day, even if you trading on futures, and I know you trade futures, but it bases my activity as well, right? So I came in, we had the numbers this morning, and we had somewhat of a pullback. So you have to change every day based on what the market is doing. And I think that's something that's very different. Whereas, like, most jobs are, you come in, you set up, and you just do a set routine, right? Like, even if you go into the gym, you do a set routine. Well, the market is like, well, I don't care if you want to do this or that today, and you can do your process, but I'll go up or down or sideways or, you know. So I think, continually um, being willing to listen to others and their perspectives on the market from a day-to-day basis is very helpful. Because I might be right one day and then look at someone else and, I see their perspective, which is very helpful. And I think that's something that's helped. And then, I think that you've talked about it a lot is just continually grinding, right? So finding your edge. What is your edge, right? Is it one pattern that you continually take? Is it something that, you do ICT and you look for fair value gaps or something like that? Most people that, I swing a little bit more, so, swing trading. So I'm looking for a continued move over a sustained period of time, whether that's one day, 3 days, a week, months. Whereas some people might just be looking for a position to enter and exit that same day. And we we might even have the same outcome, which is great. But we're gonna, so even though we have similar results, we just have different ways of attacking the method. And you should find the method that works for you. And that's really important because not everyone is the same. Not everyone wants to be in the screen, be in front of a screen for several hours a day. So if you come in, you make money, and then, you go and do whatever else you need to do, that's really helpful as well, right? Because you don't need to be in front of the screen trading 24 hours unless, for me, I have clients and I help manage their money. So if I see the market doing something, I might take some profits at a certain point or, looking at positioning myself a different way. And, that's totally different. So it's, context and then understanding how the approach of someone's market might differ from yours. That's really interesting. But I mean, following you is always helpful because I love your commentary. Back testing, seeing candlesticks in your dreams. Yes, it happens to me too.
Glad to know I'm not the only one that's happening to. Couple things he said, I just want to go ahead and highlight. First things first, not one size is going to fit all, and you're going to have to find your route. The thing is with trading, you could be a day trader, a swing trader. You got people who are hyperly scalping high frequency people who are trading 5 second charts and killing it, right? You have to find where your nitty gritty is. Now, the thing is, you should come into this game and know that it's going to take you some time to figure all this out, whether you're going to be a day trader, swing trader, whatever it's going to be. And a big part of that process is figuring out where you're going to go. So that's going to require you to test some stuff. You might have to pay the market tuition, right? Put some money in the market, then you experimenting, you might lose some money. And that's why you want to back test as much as you can and see what's going to work out for you. Now to go back to with 30 trades was talking about prior, she was talking about having a 10 trade limit and a result of it, and reviewing those results and tweaking as necessary. I encourage you to do these two things that both of these speakers were talking about. So great stuff so far. Very happy to see how the space is now coming together. Very proud of everybody that came up and spoke, and I really appreciate it. Now we're going to throw it to Mr. Rapid Repricing, but just take a break here. Again, I've been able to assemble a great panel of speakers who are dropping a ton of knowledge. A follow is free. And again, a lot of these guys and gals that are here on this panel, they give a lot of content out for free for you. So again, go ahead and follow them and absorb that content and become a better trader. Besides that, we're gonna go ahead and throw it to my good friend, Mr. Rapid Repricing. And the one question that we're asking everybody here in the panel today is what was the grind of a trader like for you to become the trader that you are today? What types of steps and processes did you take to see the success that you're seeing currently in your trading career? And I'm gonna throw that to Mr. Rapid Reprice.
Just to touch on my grind, as you know, I've spoken about my grind for quite some time now, but I would love to talk about a major turning point in my grind where I realized that me putting in 8 hours or 9 hours of chart time was not conducive for success, right? Because my goal is to make money as quickly as possible and leave, right? I'm a high frequency algorithmic trader. I do dabble into swings, 100 handles, 200 handles, doesn't really matter. But where I shine the most as an executor is high frequency trading, where I'm on a 1 minute chart and I'm scalping 20 handles, 30, etc., etc. And I'm buying and selling within the same day. I love doing that.
I think I lost him.
Oh my goodness. Okay, let me drop off and then jump off again.
Alfred, if you're there, just keep going. Somebody let me know when he's done.
Can the others hear me though?
Yeah, I can hear you.
Oh, okay, no problem. I'll throw a thumbs up when I'm finished. So a major turning point within my grind and my career was when I realized that the amount of chart time I'm putting relative to the outcome I'm receiving from the financial market is not really conducive for growth, right? I'm investing 6 hours, 8 hours staring at the chart, buying and selling, but my goal is to just get in, milk a certain model, a certain profile, and call it a day. And the only thing that was or that will prove paramount to my development is my equity size. So when you're trading small equity and you don't really have other people's money, meaning you're not really investing for someone else, 20 handles feels like nothing, right? It feels like you're wasting your time. I rather swing trade or hold for 3-4 days or hold 100 handles. But in that 20 handles, if you have a decent amount account size, and within that 20 handles, you're making 1% return on equity, that is beautiful. That is efficient. That is depth of concept. You're looking to get in, take your piece, and then leave. And what I spent majority of my time doing was grinding in the wrong places. So I'm investing my time in a model, which is swing trading and long-term trading, where I'm holding for 2-3 days or even up to 2 weeks, where I'm holding these runners. But as I'm holding these runners and these long trades, I'm uncomfortable. I don't like it. Every retracement feels like it's going to stop me out. And every time when I'm up 200 and we get a small retracement to 50% or even 75% of the range, I get anxious and ask myself, why didn't I close at 200 handles? The best way for me to combat that was when I execute long on a certain position, I get in with size. And as I get uncomfortable with every single retracement, I keep chipping away at the account size. So if I make 200 handles, I'll remove 50% of my equity. I won't move stop to break E. I'll just leave it where it is. And then if it trades deeper, maybe 70% of a retracement that I'm not expecting, then I'll still remove more positions, etc., until I got comfortable holding for a week, holding one execution and holding it for a complete week, holding it for 2 weeks. But I was investing so much time, so much effort, so much knowledge, and so much understanding into a concept in which I don't shine at. So I'm forcing myself to maneuver through PA that is not really conducive for making me shine, right? Because the goal is to be as comfortable as possible within the financial market and feel zero friction. Because the more friction you feel, the more likely you are to either make a decision, which is move stop to BE prematurely, stop yourself out by removing the position only for it to run, and then it starts a chain cycle of you beating yourself up unnecessarily. So I spend majority of my time doing that. And I also notice a lot of people as I scroll through Twitter, do the same thing where they are focusing their heart and time and efforts into a model that's not conducive. So what I ended up doing was I cut 6 hours of chart time and I moved it to one within a specific trading period between 10 to 11 o'clock or 10 to 11 o'clock my time. You can also use the 10 to 11 o'clock silver bullet in New York as well. That's a beautiful time for you to study. And if I'm not executing, I'm not trading, I'll use that time to back test, to forward test, to future test, to do anything trading related within that 1 hour schedule. So, for example, if I'm coming tomorrow and I know I'm not going to execute, I genuinely know that from 10 to 11 o'clock hour, I won't have live chart time. I might have a list of all the trades I put last week or etc. etc. And I'll use that 1 hour to study specific periods in time or turning points in which I could high frequency trade for 20 handles, 30 handles. So my invested time in the financial market was reduced. So I stopped working longer hours to make more money. So 6 hours I'll be using 6 hours to make a certain percentage or a certain outcome, but now I'm screening that down into a 1 hour process, and then within that 1 hour I'm worth something, or I'm worth more than if I was to invest 6 hours of chart time doing this. And the more I spend time engaging within that structured approach, the structured time interval of either study for forward testing, back testing, journaling, or live trading and executing, the better I became, because my retention became better. When you're studying something for 1 hour, it's much easier for you to retain that information than if you're staring at a screen printing candlesticks for 6. Right. And the mistake we make is we end up treating this like a job, like it's an occupation. You have to sit 6 hours on the chart for you to get profitable. You have to sit a certain period of time in order for you to find a conducive trade worth executing. But if you really take your time and you really tend to study the turning points at the swing points, you can literally spend a day preparing, and you have a forward time in the future. Maybe it's Tuesday London session for a certain period of time in which you're expecting either swing high or swing low to form, and a structured delivery would perform within that structural interval, because you've studied that and you've seen that so many times, and you have retained the information that you have studied within that 1 hour. And this is also kind of a method of pacing yourself. So instead of you, like, imagine you're running a marathon, right? Every hour you're supposed to run a certain pace or a certain time for you to reach a certain goal. What we do is, as traders, we don't really pace ourselves. We don't have a structured approach to meet a longer term target. What we want to do is, within a certain 1 hour period or even a 6 hour, we want to achieve the maximum outcome or the maximum goal. And we don't really break it down into bite-sized pieces. So the grind does not feel like a grind anymore. It feels like a halt. And every step you take forward leads to 3 steps back. And you're always tweaking your model. You're changing this. You're tweaking that. I don't think, if you have a structured model, a structured approach where you have a stop loss and a TP and a statistical, there's nothing for you to change. Your goal is to just find where that model fits within price action. But what we do is we'll end up using that model where it's not conducive for profit, because we spend so much time in unnecessary market condition. You know, when you're in a 6 hour, when you're staring at the chart for 6 hours, there's a lot of market profiles that occur within that period in time. And you have only one specific model which you are looking to play every single time, or every single hour, or every single 30 minutes. You're looking for that same piece of the pie to perform, but it doesn't, because maybe that piece of the pie only performs its function on the first hour, and the remaining 5 hours is just a consolidation, and you keep chopping yourself up, breaking, changing the models. And this is not really conducive for growth. So when I saw the topic of grind, that's really where my heart gravitated into. But that's just my 2 cents, my good Sir Juicy.
Perfect, perfect. I rapid repricing if you can. Try to hop off and hop back on. Sometimes Spaces gives us these issues here. We'll throw it to Dimitri. Big shout outs to Joe G and a couple other people that just joined. We'll throw it to you here in a second. Um, yeah, we're gonna keep it moving, man. So again, another trader that I want to just highlight is Dimitri. He's the charting bot. This guy, again, one of the best swing traders, and he actually got me into chocolate futures, which, by the way, chocolate futures pays money, and it's a great instrument to trade. But big shout outs to you. So the question I want to ask you is, as we've been asking everybody, what has been some of the key attributes to your grinding process that has shaped you into the trader you are today? So floor is yours, brother.
So I would be quick. I would answer with two kind of ways. The first account that I liquidated was a big slap, and it's like when you fall off the bike, you have two solutions: either you get back on it or you just stop. If you give up, it's done. You never talk about it anymore. As soon as you decide, yeah, I want to do this, everything changed. The second part would be very different. You need to find your own model. You need to find your own way of trading. You know that in the group, in the Discord, I admire you and every traders that are in it because you do some intraday trade every day. I can't do that. It moves too fast. It's too messy. I like spot trading. I like long term holding for 3 months, 2 months, put capital into something and let it ride. I don't like to look at the chart every day and say, yeah, do I cut it? Do I let it go? So it's very different. We all have our own strategy, as I would say. And I'm in Europe, and in Europe we don't really play much football, but it's a sport that I've encountered very young, and usually people play soccer in it. Uh, at some point I had to stop because I had medical issue and stuff, and I decided to coach. And I've learned something into the coaching is that first of all you need to learn how to crawl, you need to learn how to walk, and then you can learn how to run. It's a step by step. Most of the time people come in the space and say, yeah, I want to make money. Yeah, but that's not the first step. First step is the chart, second is the risk management, and third is your psychology, and only then you know how to make money. I think it's all about learning each step one after the other and not trying to rush the process. As soon as you rush the process, you lose your account. And I'm pretty sure we've all lost accounts, and we decided to keep on going and adjusting those errors. That would be it for me.
I appreciate you. Some things that I really like that you said was charts, risk management, and psychology. One of the bigger things that I want to just also highlight is step by step. I feel like a lot of people when we get involved in this, at least for me, I was really rushing the process. Like when I first started trading, I was like, dude, I'm gonna get this down in 6 months. 6 months, I got it, bro. We're gonna be buying Lambos in 6 months, right? Nah, bro. Point of the matter is, it's a never-ending learning game, and step by step you get there. And there's different levels to this, as in anything. There's levels of learning, there's levels of being break even, then becoming profitable, and then after becoming profitable, different levels of trading execution you can get. And it's always a step-by-step game. The one thing before I throw it to my next speaker, the one thing I want to say is the faster you rush learning this process, the faster you rush becoming a profitable trader, the slower it's going to hinder you, the more money you're going to spend. So again, take your time and always remember, if you are rushing this process, this is what kept me sane. I actually knew somebody, and I can't get him on Twitter for nothing. Some people in out here in life in trading, there's some traders out there that have so much capital, they make so much money, and the big thing about that is they're never on Twitter. One of those traders I know in real life, I talked to him. He's an eight-figure trader, and his tax returns are literally 10 figures. This dude is serious. He trades a lot with huge size, and he lives his life. This is the one guy that told me this was quote from his mouth when I first got going. Told me to take my time, relax, be patient, and accepts the ups and downs of trading. Trading is the only job and the only place in the world where you can fail for 8 years straight, and then in year nine, you can make literally an unlimited amount of money. And this was something that related to his personal life because that was his journey. Almost 8 years of failing, and then within 1 year, he bought a Ferrari 812. So keep grinding, man. Don't rush the process. Let this market come to you. All right. So besides that, we're going to send it to Just Wisdom, then my good friend Joe G. Big shout outs to Trucker Tom in the crowd. Hope you're well. Hope I know you're traveling around the world, man. Be safe out there. Besides that, we're going to throw it to Just Wisdom. How you doing? And the question to you is, what are some of the skills and process that attribute to the trader you are today?
Okay, good evening, guys. I don't know if you guys are hearing me. Am I very audible?
I hear you. You sound great.
Okay, no problem. Okay, good evening, Jesse, Uncommon, and Matayo, and other speakers that I see in the speaker room. So yeah, thanks for having me here, Juicy. I really appreciate that. So you asked the attributes that brought me to this place that I am today as a trader. All I can say is it's just all about being consistent as a trader. It's not been easy over the years. I've been trading for like past 5 years now or more, so it's not been easy at all. Yeah, I just migrated from a crypto trader. I was trading crypto, full time crypto trading. I was into Web 3 and everything. I traded crypto. Then I saw forex trade, and I said, okay, let me queue into this. You know, as a crypto trader, migrating to forex trading, you think the two are same thing, you understand, and everything. But the more I enter, the more it gets complicated. Then the more it gets complicated. I just took out some of my time, took out some months. Okay, let me put my mind into this. Let me get my skills well, and what do
Did we lose him?
I can't hear him neither. Can anybody
Yeah,
hear
you dropped.
just wisdom?
Dropped.
one? Don't
Hey,
rush.
Yeah, I think
Don't
so.
rush. That's one of the first attributes as a trader. You don't rush into things. You don't rush. Yes, I know. There are a lot of bills to pay. There are a lot of things to do. There are a lot of nice cars and house to live in, cars to buy, clothes to wear. Places to go, travel around as a trader. Yes, but don't rush as an upcoming trader. Taking it one step at a time is a perfect thing to do. There was one thing that happened to me like some years back. Yeah, I know I was very good in trading ball.
X, mute him up, message him, and bring him back when he's got a stable signal.
All right, I'm gonna mute everybody. I'm gonna somebody can somebody message him. In the meantime, the same question, we'll throw it to a good friend of mine, Joe G. Guy's a monster trader. You guys seen him around Twitter. Would love to have you on the floor. The question is, what would you attribute that you went through as a trader? Maybe some steps to improve. How did you become? What did you go through to become the trader that you are today? Is the question we're asking everybody. The floor is yours, brother man. You should be able to speak now. Sorry.
Oh, there we go. Yo, what's up, man? How you been, bro?
I think you're good, man. Good, man. Good to hear you.
Good, man. No, no, no. Good to hear you too, bro. Dude, that's a good question, man. To be honest, for me, dude, it's once I really understood that everything is a market maker buy or sell model, that really did change the way that I look at price. Now, when I say that is, you'll have all different types of market maker buy and sell models hitting on all different time frames, but you're going to find that one time frame complements the next and so on and so forth. um, and this just like applies to ICT stuff, right? Like if you're trading ICT concepts, everything that he's teaching essentially is a market maker buy or sell model, right? Like every PD array in the PD array matrix. So like doesn't matter if you just trade just one PD array. After a certain amount of time, you're going to want to graduate to just find out why they're hitting on all cylinders. Why did that breaker fail? Why did that FEG fail? Right. But time frame alignment and market maker buyer sells are what really did it for me, man. Um, and again, this just applies to ICT stuff, right? But once I really understood that, that definitely changed things for me. I like what Alfred was saying there before too. I think like we tend to want to get hung up on spending too much time on the charts, which could be detrimental, right? Because then you start overanalyzing, then you get in like a what do you call it, like a analysis paralysis type thing, right? Where you almost like over inundated, and I tend to do that myself sometimes too, where I have to kind of pull myself in. But at the end of the day, it really like before you go into the market, you should have, like a high time frame chart, like posted up on a wall somewhere. Like, this is what I'm anticipating on a high time frame. This is what I'm anticipating on a medium time frame, and this is what I'm anticipating today, or near term, short term targets. You know what I mean? I find that obviously you don't have to look at the high time frame stuff all the time. It's just something that's there. It's like, okay, this is my draw on liquidity, right? This is where I'm going to get to. This is my target high time frame. Where am I within a lower time frame step down from that, and then a lower time frame step down from that, and then intraday. So, like Alfred mentioned, you're gonna have different market profiles every day, right? Like, you're gonna have classic buy and sell days. You're gonna have seek and destroy days like today. You're gonna have London reversals, New York reversals out of London, all different types of stuff, right? But within that, we all should be trading just one model, right? Like, whether it's an order block, whether it's hey, I wait at 950 for the 950 macro. I want to see price trade down into an FVG from London, hit it, and then reverse, right? That's a model. Like, so you really should be looking for just that one model. Try not to overcomplicate it, but having the framework laid out in front of you, what you're anticipating for that day, and then even higher time frame. And this way you have your like idea, like for the day, like, hey, by 950, I want to see price get to here, right? And then if this, then that. If it hits my level at 950 and delivers straight away, I'm long, and I'm going to hold that trade for X amount of handles to this liquidity target or whatever, right? But like, you have to have like an entry plan, an exit plan, and all this stuff thought out well before in advance. Like, it's fun to trade, what you see in and around you at the moment, but is it your model? Is it something that you would take every day that's going to work for you? Or are you just clicking buttons for the sake of clicking buttons? Because if you're just clicking buttons, then that's really doing you a disservice, because you have no data on that. You don't know if it's going to produce. You don't have any entry or exit targets. You're kind of just winging it, right? And trading really isn't about winging it. It's about showing up prepared, so if you can understand where you are in the chart, in relationship to what you're trading, what time frame, whether it's a swing trade, intraday, or position trade, whatever you're trying to do, like, as long as you have that framework laid out and you have your entry, exit already predefined, already laid out, where you want to get in, where you want to get out, I mean, that's half the battle. I think most people don't even have that, honestly. Like, I do it myself. A lot of times I just wing it. Like, I'm like, okay, this looks like a good entry. Oh, it's around 10 o'clock. Oh, cool. I can expect this. But like, if it's not aligning with what you normally feel comfortable with or what works, then why are you taking it? You know what I mean? So it's like, that's the stuff that I learned a lot. This year has been very difficult trading, I think, for most people. The price action has been really unclear. It's hard for me to find a high time frame draw. It's hard for me to find medium time frame or even a lower time frame draw sometimes, because the price is too squirrely. It's a ton of uncertainty, but you just got to always be evolving and changing, right? So like, I'm lowering my targets, I'm lowering my expectancy or what I want out of the market. You know what I mean? Because I can't force it. I can't will it. Yeah, I want the market to do this. Doesn't mean it's going to do it. So trade it the same way as your model, right? Like, trade your model. If it's there, take it. If it's not, don't force it. You know what I mean? You shouldn't be forcing anything. If you have that rigid system in place, it's going to protect you from getting cut, and that's kind of what I learned, and that's really helped me a lot, and I'll pass it off to somebody else, but I figured I'd share that.
No, appreciate you, Joe G. You dropped a lot of stuff here. A couple things I want to highlight, and I know Just Wisdom pop back up. We're going to let him finish right after this. One thing I want to highlight is what he's trying to say is confidence comes from preparation, right? So every day you should come up, like you were saying, to have some type of higher time frame plan with your model. One model. Don't wing it. I know a lot of people can wing it, right? But winging it can only get you so far. But consistently trading one model over and over and over and over and over again, is literally the secret to success. And sticking with that model. Would you dump your girlfriend every time she gives you a problem? No. I mean, some people do, but again, they're never really happy, right? But the people who are happy in long-term marriages, they stick with their partner no matter what. You have a model, you stick with that model and stop strategy happening. So good stuff. That's Joe G. And again, be sure to follow him. More importantly, to everybody, be sure to follow everybody here on the panel. I really like where this conversation is going and how this conversation is going. So we're gonna keep it moving. We're gonna go ahead and throw it back to Just Wisdom. I know you had a mic problem just before, but we finally got him back up. Same question applies. If you want to start over, it's all good, but the floor is yours, brother man.
Okay. Sorry, are you guys sorry for the
I
mic.
I hear you, but you are coming in a little choppy.
Okay, sorry. My mic was having a big issue before. Like I think I fixed it now. Sorry. So I was talking about being able to wait, being able to take it slow as a trader, being able to uh, be calm in trading, do not rush in trades and everything. Because yeah, for me, starting my trading life years, I wasn't taking it slow there. I was kind of rushing to hit, a climax to get to this profit target and everything. And it was a very, very, very bad wreck to me. It was a very bad wreck to me. So um I would say tell people do not rush. So as a trader, the patience is our key. Patience is our key to consistency. When you are patient, like when you're patient, that's you've done like 30% or sorry 40 part of being consistent when you're patient already. So another thing is about trader. I would always say this: show up in the market. Because experience alone, experience alone is is what helps in this market. Show up in the market as a trader. Like show up every day. Show up every day. You can't say I'm going to the gym. You can't go to the gym just for like 1 week. You want to get a good body part. Just go for 1 week or 2 weeks, and yeah, you're like, yes, I'm done. I'm good with this body. Nah, it's not done like that. When you want to start the gym lesson, you go steady every day, every 14 days for the full year. Yes, you're being consistent, and you're gonna do that. It becomes part of you. It becomes part of you. Not maybe you hear the gym 1 month, you're like, yes, I'm done. I've gotten the kind of body I want. I'm not gonna go to the gym again. So the thing is all about showing up every day. Be in the market all the time. Watch the market. What am I doing? This is what I'm doing. I will stick to this. I will work towards this all the time. And very much another beautiful thing that contributed to my profitability was having my own pattern, having my own way of the market. Yes, I learned from a very, very good trader. I don't know if you guys know Lewis Kelly. Yes, I learned very much from him. So, but since that I don't trade this pattern, I just found my own way in the market. I find I found my own way in the market. I brought out my own way of trading. I don't look. I hardly trade with people. I am a trader. I don't trade with people. I don't even have a trading partner. But I found my own way in the market. I'll tell you, you must not be like a mentor. You must not be like the person you're looking up to. Yes, emulate from him, but find your own way of trading. Trading is a journey, and you can't say, yes, I'm working on the journey. I'm working with some common. I'm working with juicing. You're gonna work on it alone because what if the people you're looking up to, okay, something happened, they go out, you're not hearing from them again, or you lost contact with them, what's gonna happen? So that's why I say trading is a journey. You work, create your own way of making it out of this market. Create your own way of making it out of this market. The day I cracked that, that shit of having a strategy and finding your own way. The day I cracked the code, I noticed that yeah, trading is actually 70% easy. It's not actually the way we see it. Getting to the market is not hard. Open the charts, relax, see an entry, take an entry, make some bars of the day and close the market. So that is it. Find your own way in the market and don't rush. You take it easy in the market because let me tell you the truth. when you tend to, how would I put it? When you tend to take it, rush into the market, you're gonna learn the hard way. What do I mean? When you say, okay, yes, I have a trade, I'm gonna when you're okay, the first part, sorry, let me check this in. Know the kind of trader you are. Are you a day trader or a swing trader? I would see most people that are day trader tending to hold the market for I need this market to get to 1.1 is 7 hour, one is 8 hour. You're a day trader. You tend to hold your market, you enter the market with a 15 minutes time frame and you tend to hold it to um 24 or 48 hours. Nah. I'll tell you, if you're a day trader, stick to day trading. If you're working with 15 minutes time frame, take your profits at the nearest 15 minutes high or low. That's one thing. Work with it and you see yourself being profitable. Most times, yeah, sometimes the last 2 years I saw, okay, what was holding me back was, yes, I tend to trade on, I'm a 5 minute trader, 10 minutes trader, yes, lower time trader. But I'm going to be looking for high RR. And my trade ends up going back maybe to entry or break even. So I had to check on this. Okay, what's the loophole? What's the loophole in this? What's happening? I have to see. Okay, this was happening. I had to fix it immediately. And since then, my trade has been working perfectly. So that's the thing. Know what you're trading. If you're a day trader, just know that you're a day trader. Take your trade and hold it, and know where you're taking your profits. If you're a swing trader, hold it for long as you can. You have set your market where it's gonna be. And for swing trader, you're gonna be patient also. Then for day trader, you're gonna be patient, but for the day, take your profits for the day. I always tell my people, I open the chart every day to make money for the day and close. You can't see me holding trade. I hardly go trade for more than 5 6 hours. No, I don't do that. I just open the chart to take the money of the day, the money of the day, and I do that maybe like maybe 3 times a week or and that's being consistent. Being consistent. I'll tell people you don't rush. Find your own one, your own way in the market, and be consistent in what you are doing. Show up every day. Be consistent in what you are doing. These are the attributes that really helped me and helped me a lot in this trading journey and brought me to the place I am and the place I'm still going. So that's just it. Thank you very much, Jesse, for having me here. Thank you very much.
He highlighted, and again, Johnny, we're gonna throw it to you right after this. One thing I want to say is, patience is a huge key attribute to becoming successful in trading, and not just patience on the chart. I mean, that is automatically a given, right? It's there. I got to be patient. I got to let the setup come to me. If it doesn't come at this time, blah, blah, blah. But you have to be patient in the sense of your account growth. You have to be patient in the sense of your ability to morph into a trader, because again, this is the journey to become profitable. To become profitable, it is a journey, and it's not going to happen overnight. You have to be patient and go with the ups and downs of that journey. So again, I do appreciate you for coming up. Be sure to give him a follow and everybody else a follow. So the order is going to go like this. I'm messaging speakers here. We're going to throw it to Johnny, then a good friend of mine, Feriano J, and I'm messaging the other speakers. But besides that, we're going to go ahead and throw it to Jay. So the question is, what did it take, for long story short, what did it take for you to become profitable? What type of stuff did you go through? What type of skills or practices that you have to put in place to get you to that area of profitability? And that question is going to go to Johnny.
What's going on, Juicy? Thanks for allowing me to speak on your space, brother. So I'm just gonna get quick to I'm gonna get quick to it, and uh, a few things that I learned along my whole journey, which is I'm still a little fish in a big ass pond, right? That's trying to still be as successful as you can be, but a few things that I did learn in all this process is that there's a lot of lying in this industry, a lot of God's people telling you, yo, I'm a rich, I'm making money, I'm making this, I'm making that. And they're full of shit. They're not making no money. As a matter of fact, they're selling you something because they're not making money, right? And so that was my entry into this market, right? I started in IML, so it was all about signing people up so you could get a free service and blah 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 blah. Anyway, long story short is that wasn't the real route. And then my second biggest learn that I caught on to this is that you have to really sit down and think about what you want to do, right? And don't think about money. Think about your real why. What is your why? Why are you really in this? And don't make it all about money, because money's not going to change you, bro. If you were a bum with money, without money, you're going to be a bum with money, right? Because money's not going to change you. It's just going to give you an ego trip. So I learned that real early in my journey, right? When I started making tons of money, just from straight gambling. I didn't have no skill set, no nothing. I would red or black, and whichever one won, I was on the right side of it. I would cash out my money. The next news event would be my next thing, right? So after a while of doing that, you're gonna learn that journaling becomes your friend. Watching the markets becomes your friend. Watching how these candles print on a specific time frame that you actually want to trade on, right? Will become your best friend. The more you see what prints, the more you're gonna know what you're expecting next, and then you'll know exactly why a lot of these guys. I'm actually happy I'm coming up before Fariano, because once he takes, he's gonna destroy the mic. But he'll break down his whole theory to you, and you're just gonna be like, "Holy shit, this man knows it second by second." Why? You think he just woke up in the morning and said, "Boom, I know how to trade"? That's it. I know that at this time this is gonna happen, and at that time that's gonna happen. No, that was chart time. That was him journaling. That was him putting in the works, the sweat, the tears, right? These are the things that people will never speak to you about in this industry. Nobody's ever going to tell you how hard it was for them to actually say, "Yo, I'm going to quit my job tomorrow because I know that I can make money out of this market," right? Have I been successful at getting payouts? Yeah, sure. I've been super successful at getting payouts, right? But I've also go on strips where I haven't got a payout for 2 3 months to go along with it, right? So this is the reality of being a trader, right? Not everybody. Social media is also, in my opinion, isn't your best friend, right? Find the way that you want to trade. Stick to that shit. Lose, win, bloody, green, whatever it is, stick to it. Keep fighting for that one thing. And then you come onto social media and you say, "Okay, I'm a support and resistance trader. I'm going to follow this guy. I want to trade a line. I'm going to follow that guy. I want to trade ICT. I'm going to follow this guy." I'm not giving names because I'm not here to promote anybody's shit everybody got, and I'm cool with everybody. So that would be your job as a trader, right? You have to go out there and say, "Okay, if I want to be this type of trader, then I know this community is offering me that, and I think that this is the best." Another thing that I've learned in this journey is join any Discord, a paid Discord. If within 3 months, 4 months, you can't make money out of the market to pay for that Discord is not for you. Keep it pushing. Find the next one that's going to help you get there. And there's a ton of great people on this platform that can help you get to the next level once you put in the work. You have to put in the work because you're 95% of what's going to happen. 5% will be any other mentor. He's the one that's going to grab that little 5% and show you what you need to elevate yourself into the next one, right? And so that's just my 2 cents on how I've experienced this market so far, Juicy. And so I'll just give back the mic to you guys.
Appreciate you. That's Johnny, guys. And a couple of things that I know rapid repricing has hands up. Before I say throw it to him, I just want to say some stuff. I'm taking notes. What everybody come up here, right? I'm analyzing what you're saying. One thing that really stood out to me was just at the end, the 95 to 5% ratio. And I can't agree with you more. A lot of times, me personally, I own a Discord and I run a Discord with a lot of people. And a lot of times people come in and they're like, "All right, well, you trade, you make money. I'm just going to follow everything that you do and I'm going to try to make money." Well, one, realistically, you can't catch every trade that the alert service provides, right? Because the market's opportunities, we have macro times that we like to look inside macros, but market's going to move when market's going to move. And if you're not there, your P&L won't look exactly the same. So it does come to it. Your purpose inside of a Discord is to learn so that you can trade on your own. You don't even want, even if not, you never want to depend on somebody to give you fish. You want to fish for yourself. A lot of great topics been said here today. Big shout outs to Johnny and everybody else. I'm going to keep my portion of that smooth because I want to get through everybody. But be sure to go ahead and follow Rapid Repricing. You wanted to make a comment, and then Jay, prepare because the floor is about to come to you. So Rapid Repricing, what's up? Did you have a comment or something?
Yeah. Can you hear me now, Juicy?
I can hear you now.
100%. I just wanted to add on a very touching point from Johnny, where he did say there's a lot of goobers who are lying here, and that's definitely true. The feeling you get when you officially say, I'm quitting my job and I'm putting my 100% faith in myself, that is very scary, especially throughout your grinding journey, where you are forced to trust no one other than yourself. You are fully responsible for every decision you make, and every decision will either lead to a profitable outcome or not. I remember a few spaces ago, I told someone that I did have a quarter where it was negative, a whole 3 months where it was just a drawdown. I couldn't get out. It was 2% loss, and I couldn't come out of it. And it was like worst. I won't say worst month, but for me, it felt so uncomfortable because I never thought I could have that. I never thought I could have 3 whole months where I'm not making anything. And for you to feel that, to overcome that, to grind through that and overcome and still trust that you will get your bills paid, you will put food in your mouth, and you won't gamble, you won't degen. That's a very scary feeling to overcome. And I believe every consistent trader is trying to get to that point where they fully trust themselves, where the opinion of someone else does not matter, regardless of how they say it, the way they put it, or how they structure it in every shape, way, or form. You have something that you hold dear to your heart, and you know that this thing will feed you and your family for months and months and years to come. And it's a pretty scary feeling. But the best goal for you, like if you want to get to a point where you do kind of like quit your job and then pursue trading full time, at least have a year or two worth of your annual salary. Like if you have that, like in savings, like 2 years worth of your normal salary upfront saved now, then you can pursue trading full time. I believe that. But if not, if you don't have a safety net, if you don't have a nest for times where it's hard, for times where you don't have to trade, because I've come to notice this when we're beginning and you don't really have a pool of money, every day is an opportunity to make money, right? That's how you view it. Every day is an opportunity for you to take the money from the marketplace and put it in your account. But when you do have money, what you realize is every day is an opportunity from the market to take from you, right? And your goal is to filter out as much days as possible where if it does take something from you, it takes a little amount and doesn't hurt you and doesn't force you to fall on tilt or do what's not acceptable. And every time you do engage and it does play out profitably, it was a beautiful execution in and of itself. But that feeling, that moment where you want to transition from your job to fully being a trader and paying yourself, that's what you're basically doing as a trader. You are your own boss. You give yourself your own responsibilities. You give yourselves warnings. You give yourselves warnings is what we use here in South Africa. If like someone is doing something bad or like he's late consistently, we give them a verbal warning first, then second warning, written warning, blah blah blah. But you give that to yourself as a trader. And majority of us are bad managers of ourselves. We are bad bosses to ourselves. We fail to be responsible for the decisions we say we're going to make. And those decisions have consequences because you are a business in and of yourself. And if you can't treat yourself like that, then you can't survive the long term. If you don't have a safety net in case of maintenance, in case of emergency, where unforeseen circumstances occur within the financial market, which you can't navigate and overcome and make money within a certain duration and time, what's your safety net? If you don't have that, every trade will, or every single time you're executing, it will be out of anxiety. It will be out of fear of losing because you want to get there to take something from the financial market and add to your own. But in reality, the market is there to take from you. Why is it there to take from you? It can outlive you. If you could outlive the market, then you are here to gallivant and eat the marketplace alive. But if it's going to survive longer than you, that means it's going to try and fool your kids and your kids' kids when you are far long gone, and it's going to try to take their money. And even if you do make money now and you become efficient and you pass it down to your kids, if you don't pass down principles and ways of thinking for how they can preserve capital over time, then it's useless learning it. You need to find principles that you can carry out far outside the trading chart in and of itself, far outside the execution. And that's kind of what gives the solitude and that strength to believe in yourself. Because when you are trading and you're paying yourself, what you're basically saying is, I believe in me and me alone. And all the decisions I make, I am fully responsible and I will suffer the consequences. Whether the consequences means no food in my mouth or food in my mouth, I'll accept it. And once you accept that and you're content with the model you use for the rest of your life to make your money, then and only then, I believe, can you call yourself a trader and really start teaching people and talk about it and really give people the experiences, because you really lived through it. You lived through the time when this thing meant nothing to you, where you couldn't even read for nothing, to a point where you're milking 200 handles and people are asking you, how the hell do you do that on a day-to-day basis? That progression, that growth, it's nice to watch the grinding process as you come. But that's what I kind of wanted to add on, Johnny. Very beautiful, Magutsa.
Appreciate you, brother, for adding that on. You said a lot of good topics. I'm gonna throw it to Jay here in 1 second, but one thing that, again, this space right here, man, this is the space, man. I love everything that's being said. One thing that Mr. Rapid Repricing said was drawdown. He said, and I love the transparency. Said I was in drawdown for 3 months, but he's still there. That means he came out of drawdown. I don't think you should be able to teach anybody, talk about trading, or consider yourself a professional until you're able to come out of drawdown, because drawdown is inevitable. I'm saying this again, write this down. Drawdown is inevitable because the market isn't the same condition from January to December. There's a lot of stuff that switch, and especially right now with T+1 delivery, no more T+2 delivery, we're seeing the age of volatility. Nobody's 100% profitable every second, every day, and drawdown is part of it. So with that being said, a true professional should look forward to drawdown and understand that I'm in drawdown and have parameters in place that they can trade and effectively get out of drawdown. If you can't get out of drawdown, you end up with a blown up account. So besides that, we're gonna go ahead and throw it to my good friend, Feriano Trades. The guy is the time master. Be sure to go ahead and give him and everybody here a follow. Besides that, I'm gonna throw it to you. The question is, what would you attribute to your current success? What types of, when you were unprofitable, what types of practices did you have to go through, and what types of practices did you put in place to ensure that you became profitable?
Hey, good morning, guys, or afternoon, depending on where everybody's from. Hope you guys are having a great week. CPI week has always been a pretty good week, I would say, overall for me in general. Lots of volatility and predictable, I would say predictable volatility. I think today's topic is a great one. One that I think definitely can help tremendous amount of people who are coming into the industry looking to essentially find some level-head footing and find their own pace when it comes down to how they're going to win this marathon. Because at the end of the day, trading is it's not a sprint, right? It's a marathon. Um, Also, one thing I wanted to add even before I go into the question or the topic is that knowledge is not power. I truly believe that practical knowledge is power. Um, I Right before I got into trading, I was running a marketing agency. I run businesses and worked with the government doing cybersecurity before that. One thing that always stood out to me is that you can learn from all books, you can learn from different things, but the knowledge that you gain from people, experiences, and life is so invaluable because it teaches you how to actually apply it. And ultimately, the goal is to take that and turn it into principle because the principle will always allow you to understand how to, not necessarily what to. So I hope that makes sense. So, and how it ties to what I guess what we talked about today is learning from other people's success allows you to be able to know how to, right? Not what to. So when you get into situation, you can kind of develop the understanding or come with the proactive solution as to how to resolve it without having to go back to the source and always ask for the question or ask for the solution. So in regards to what really have helped me, I would say break the mold and get to the point where I found myself being much more consistent and profitable and actually started seeing myself pulling money out of the market, which is something that's very unusual, I would say. And I think most trader, when they begin your career, you think, as a dream, is that even possible? But when you start actually doing it, it feels unreal at first. Um, but you have to have that vision, right? In terms of you believing that you can actually achieve that. And I think a lot of people don't even have that belief. I think that's the number one thing. Actually believing that you can and you can receive that from the market. But the thing that really helped me first was like the understanding of like that's possible. Right? Because I think a lot of people are in this industry and they don't even have they trade, they come in, but they don't have that belief that it. When I say believe, I'm talking about like actual excitement about trading. We have hobbies, we have like things that we do in pastime and things of that nature, but like, how do you treat trading? Do you treat it as a hobby or pastime, or do you treat it as a profession? Actually, are you actually taking time to read? But do you get excited when you talk about trading? Do you get excited when you coming into the market, just looking at the chart? Can you just look at a chart for a few days or sometimes session, just learning, taking notes, trying to analyze, trying to find patterns, trying to find things that are repetitive, right? And where you can essentially find your edge and develop your edge. I think that's number one, because you cannot eventually get to the point where you are fully a master of anything that you're doing if you don't really love it to a certain degree. In more precision, and one of the things that tremendously helped me, I used to trade supply and demand, support and resistance, a year and a half ago. And after that journey, I encountered ICT. When I began learning ICT, the one thing that I was primarily doing was simply, believe it or not, I was trading on one time frame, the 1 minute. But the one thing I think I was doing really well, and that kind of helped me survive, I would say, is that I was trading macro. I always have traded macro. The very first thing, that was a good thing, I think, when I came across ICT, because I learned immediately about time. I think a lot of the time it takes people time to like adjust and infuse time alongside finding P theory and developing narrative. When I say time, I mean precisely trading specific macros, like those 10 to 15, 20-minute interval where you're going to see most amount of volatility. Um, it's okay to trade kill zone. Like people, I've seen some people that swing trade and that trade kill zone. That's great. But I think for scalpers specifically, I truly believe you've only found success if you trade specific, if you are aware of specific window where price is going to deliver a move, right? Deliver clear reversal after performing something that you're looking for. So what I was doing in the very beginning was just trading one time frame, which was 1 minute. I was looking for a sweep of liquidity of like military record levels or like a specific type of liquidity, and I was looking for reversal with like fair value gap or market structure shift with displacement. Literally, that's all I was doing, and that kept me, I would say, at break even for the most part for the first few months when I was learning ICC. So I didn't really have a strong way of identifying a narrative on a higher time frame. I didn't really have an understanding of like strong CISD, like unicorn breaker, inversions and BPRs and things of that nature. Like I didn't really understand those. But when I came across Twitter and I jumped onto Twitter close to like October, November last year, it tremendously helped me coming to groups like the one with Juicy, like this spaces like these, like the one with kids, the trader roundup, listening to a lot of people that have already succeeded and that are already doing really well. And what I did was this: I was coming to those spaces consistently. Georgie was someone that helped me tremendously, like with market maker model, understanding exactly how to dissect those. What is the standard, what are standard deviation, right? Those are things that you guys will need to write down if you guys are not aware of those things. How to utilize standard deviation alongside your analysis from the higher time frame to the lower time frame, right? Because you can use standard deviation on your narrative building, right? When you're trying to identify how far we're going to extend with a reversal or distribution stage when past is getting ready to deliver a small money reversal, that helps you tremendously to identify that. So you can kind of project where parts can potentially stop distributing and begin reversing and rejecting and starting to essentially flip over. On the lower time frame, you can do the exact same thing. So understanding those different concepts and then starting to find ways to make sense of it. The My model, if I had to break it down in the simplest form, will be from higher time frame to lower time frame will be this, and this is what I truly, when I was able to articulate this, so I'm going to articulate now. That's really when things started like clicking for me. If it goes from the higher time frame, I would look for PO3 or weekly profile. Very very simple. If you're looking at a monthly, a month has 4 weeks within it, right? So we are aware of AMD or power of three. In the power of three, you're going to have accumulation, manipulation, and distribution. If that's the case, most of monthly PO3, you're going to see the first 2 weeks typically accumulate, and then you're going to see manipulation happen between the second and third month. Now, that's not going to always be the case, but in general, I'm just talking about in generality here. you're gonna see that manipulation happen when closer to the second or the third week, right? When you see that manipulation happen on the second or the third week, what do you get after that? Distribution. Distribution, right? So within a week, if you're looking at now at a specific week, within a week, what do you have as well? You also have a PO3. You also have an AMD, accumulation, manipulation, and then distribution, right? So if I'm looking at a week, when does the high of the week or the low of the week get formed? Between Tuesday, Wednesday, or Thursday. How do you get more precise about that? Red folders. If you're looking at when are the red folder going to fall? For example, this week, if you look at this week, for example, we have red folders yesterday, we had PPI, we had CPI today, and I believe we have another red folder tomorrow. So when you look at all those things, you can almost anticipate where the manipulation going to happen depending on where the red folder going to be located, and also where the high time frame PD rate are also going to be sitting in, like where the weekly P or where's the weekly fair value gap, a daily fair value gap, as prices essentially approaching Tuesday, Wednesday, and Thursday. When as we have those red folders, look at what we're going to manipulate towards, and look at how price is going to react off those PDA rate within specific window of delivery or within specific macro trial opens, maybe closer to open or within silver bullet windows. And you can almost anticipate potentially a lot of the time where the high or the low of the week going to be located. So that's the high time frame. The high time frame is not something that's meant to be like, oh, I know exactly this is going to work. Like, it's just to have awareness. And when I understood that, and I said, oh, you know what? Now I have a little bit more context on a high time frame. And sometimes you can see market maker model play out on a high time frame as well, like on a 4 hour to 15-minute time frame. So those are some of the things on a high time frame that helped me tremendously, like have awareness, simply have awareness in terms of like what is distributing on a high time frame, what is happening on a high time frame. So now when I zoom in onto the lower time frame, like on a 1 minute, for example, because I trade on a 1 minute for the most part, but I look at a 15-minute for major liquidity level being taken out before looking for my entry, and I sometimes also zoom in onto the 4 hour. I'm able to understand, okay, if I get my CISD after pass has done whatever it needs to do on the 15-minute or the 4 hour, I know exactly where to engage. But it has to happen within specific window. So another thing that really tremendously helped me was trading within windows. And I'm going to give you guys like my specific windows that I trade. Beginning at 9:30 is really where I begin looking for opportunities. So 9:30 open most of the time, not I won't say most of the time, a lot of the time you're gonna get an entry form there. Between 9:30 to like 9:32, ideally, to be honest. Like the first 3 minutes of the open, 9:30, 9:31, 9:32, if you get an inversion or BPF form there or unicorn breaker that get confirmed within those first 3 minutes, that for me is an extremely high probability if it has grab liquidity before forming it on a 15-minute or higher time frame. I'm telling you this right now. You can go and test it for yourself. You guys will see. It's extremely high probability. And sometimes you can get that entry form from 9:30 sometimes all the way up until like 9:39, 9:40, 9:41. The next window after that is a 9:50 macro. From 9:50 to 9 to 10 a.m., 9:59. Ideally, that's when I'm looking for it. It can also sometimes go all the way to like 10:10. And then typically 10:15, around 10:15, you can also sometimes find an entry. After that, 10:50 macro. Really, those are the only four windows that I trade in the morning, and that's it. And you will see, if you simply look at those windows precisely, you will see price form consistently around the open, a reversal in the morning, or continuation. When you look at the way that the daily kind of form, the daily also has a PO3. We went from the monthly PO3, we went down to the weekly PO3. Now I'm talking about the daily PO3. The daily also has a PO3. Now, when you think about the daily PO3, where does the major confirmation of that daily week, or I would say, yeah, week, top week or bottom week get confirmed? The first one within the opens window. So from 8 to 12, or the AM kills, I should say. So that means that for me, if I'm trading London, I'm in New York, I would say I have no business. I'm saying for me, the way I trade, looking past 12 for any reason, because the best move going to be delivered most of the time, 90% of the time, between 8 and 12. So understanding that allowed me to not look at a chart for 5 hour, 8 hour, 10 hour, because the more you look at chart, the more you're prone to make mistake because your mind go idle. And part of psychology, when you understand, like as you trade, the more you trade and the more you accumulate, you start understanding that less is more in trading. Less is more. You don't need more hour on the chart. You need less hour on the chart, but you need to have more context in regards to what you're looking at when you're looking at only for 1 hour, 2 hours. You need to train yourself to the point where you understand what's delivering within 2 hour window so that you can trade that, and that's all you need to look at. So you have experience in understanding, okay, I don't only need to know what have happened prior to this hour so that I can only trade these next 2 hours. But if you don't have that context where you need to look at 6 hour in the chart, I'm telling you, it's going to be very tough to maintain that over a long period of time because you have to think people underestimate what they can do in 1 month or 1 week and overestimate what they can. And I'm sorry, people overestimate what they can do in a short period of time, like 1 week or 1 month, and underestimate what they can do in a year. You have more chance of being consistent, spending less time on the chart over a longer period of time versus trying to make that quick big profit within a month or within a week. It is not sustainable. It is not sustainable. To be honest, I'm finding more and more ways every day to trade less and less hours, less and less time. Consistently finding ways to trade less and less time. Why? Because less is more in trading. And like I say, one of the philosophy that I believe in, this is part of ICT concept, is that AMD for the daily PO3 accumulation, manipulation, distribution, London and Asia are going to typically accumulate. You're going to have a manipulation that's going to happen between 8, right, and 12 in the morning, as well as a distribution or the beginning of that distribution. So you're going to have an accumulation and beginning of distribution. So that always going to look like a continuation trade, right? Pull back maybe to discount or equilibrium of whatever range that's created in that morning and then continue. Or it can simply be a clear reversal after manipulating up to or down to a specific level. That's it. If you go back right now, and I'm telling you, just look on the 15-minute time frame. Put your chart on a 15 or 5-minute time frame, and then you look at between 8 and 12. You just look at it, like just zone out and block out of those 4 hours every single day. You look at it, just visualize it. You clearly see an AMD, and you see that the MD will always, like 90% of the time, will happen. There will be an MD happening in that specific window there. So now, if you train yourself to find, okay, how can I identify this MD, this manipulation and distribution, distributing in this window, you'll be able to build something amazing. And then you will realize that those MD, specifically the beginning of the distribution, will happen inside of specific window, the one that I mentioned earlier, either at 9:30, either at 10 a.m., beginning of 10 a.m., or around 9:50. If it's late, it happen closer to 10:50, like most of the time. That was something that helped me tremendously find consistency. But the the thing I also want you guys to understand is that the better and more precise you are about your system, the way that you trade, the less work you have to put in your psychology. I'm going to repeat that again. The better and more objective your trading system is, the less work you have to put in your psychology. The less objective your system is, the less objective and precise you are in regards to how to engage in the market based on your system, the more work you have to put in your psychology. Meaning that if I ask you what is your trading plan, what is your trading system, and then there's so much subjectivity attached to that, like, oh, I need to look at this and I need to analyze this. If I'm in a trade, I need to manage it, and then it's never the same way that you manage every single trade. You have to do a lot of work on your psychology consistently. But if I ask someone, what is your entry framework? What is your exit framework? And they can precisely describe that. And then the way they execute it, they enter, they let it go to TP, or they enter, they let it go to stop loss. They know precisely how to just enter and exit. The less work they have to do on their psychology. People believe that, like, people sometimes, I think, trains work on psychology backward is crazy to me, right? Because the way that you actually work on psychology is working on your trading plan. You may not understand this right now. I'm telling you, like, this is something that Once it clicked in my head, I was like, whoa, that makes a lot of sense. The way that you work on your psychology is working on your training plan, making it as objective as possible in the way that you enter and exit, and finding a way to make you focus on less rather than more. Because when you come into the market, your goal is trying your best to not be idle. It's a say that goes like this: an idle mind is a devil's playground. The more you spend time looking at a chart all day long, the more your mind goes idle. The more you find yourself like wondering, and the next thing you know, you're taking trade that you're not supposed to be taking, or you already won and you're still looking at a chart. You end up taking a trade that you're not supposed to be taking, and then you catch a loss. Those are the things that tremendously help me. You have to find ways to consistently, how can I do less on the chart? But you earn that, right? You earn the right to do less by consistently adding and then testing and then actually verifying for yourself that, okay, I don't need to look at this because I know based on data that I've collected, this is where most of my opportunity came from. I used to trade from 850 macro, actually 830 open, all the way to 1150 macro. Now I literally only trade 930 to 1017, 1016. I only trade 46 minutes, 47 minutes. And out of the 20 trading day in a month, I make only cash like 14 to 16 trading day on average. So there'll be like an entire week worth of days that I won't trade in a month. But you know what? I'm okay with that because I know 90% of my entry will come in that window that I just described. So I don't need to look at 850. I don't need to look at 1050 that did a little move or whatever because I'm okay with that. I'd rather spend less time on the chart and have more time, more of my time back in my hand so I can do other things. And also that my psychology get better because the less time I spend on the chart, the better in general trading going to be for me. But this is just to give you an idea. But ultimately, if I had to answer that question, that would be how I would answer it in regards to what we really have helped me along the way, finding footing and consistency and profitability and to where I'm at right now. So so yeah, this is a really great topic. I hope that was.
Man, I just want to come in and give you your flowers and say, man, thank you. I really appreciate you for coming up. Hope everybody took notes. He dropped some time elements to it and a couple of things I just want to tag along and highlight a couple of things that he said. First things first, for the skeptics out here, if you ask almost every successful person, visualization was a very, very big part of their success. I use visualization. Like I just posted one of my trades from the day up top. There's no Discord links or anything like that. There's no advertising. It's just a trade with some of my favorite music in the background. What I like to do sometimes before the market ends, I have a dial-in process. Like my wife knows at 9 o'clock, don't fuck with me. Don't don't mess with me because I'm watching myself trade. I'm watching the winning trades and I'm watching them happen and I'm listening to the music and I get pumped because I just visualize myself winning. And I got that energy of winning coming into the market. Very, very big key factor. You should always have that. You can achieve this. The only limits in life are the limits you place upon yourself. And I truly believe that. Next is less is more. And that is a very common thing. Jay said it. I always preach it. Everybody on this panel pretty much said almost the same thing, is that you don't have to be in every move of the market. Now, if you can take that theory, and he just backed up what he said by less is more by telling you out of 20 days in a month, probably 14 of those days he's there. And then he took it on top of that and said, I'm only trading at this time, that time, this time, and that time, because that gives you the discipline and that gives you exactly where to look. So big shout outs to Jay there. Be sure to go ahead and give him a follow and give everybody else here a follow, guys. But that pretty much runs it. We ran through all of our speakers here. I just want to say thank you guys for everybody that came up and spoke. I'll be looking to do more of these spaces here in the future. What I'm looking to do is create a series of spaces where futures traders can come together. We can talk about things. We can have different topics. So help me along that mission by retweeting the tweets that you see, that me posting out about these speakers, following these speakers, and most importantly, you as the audience, I want to create content for you guys. My DMs are open. It's me, and I have an assistant in here. DM me something you're struggling with. DM me something that you can't get over, whether it's I'm in drawdown, how do I get out of drawdown? Anything, topics you're struggling with, DM us this stuff so that we can cater content just for you. That way you can get something out of every space. And that's my main goal. Every time I speak or anytime I'm around a certain group of people, is for you to get something that you can use today. I hope this space has been helpful. I look forward to seeing all of you guys in the next spaces. And as always, remember, the market will pay the patient trader. Wait for those setups to come to you guys, and I'll see you guys on the next space. Be easy, everybody.
Thanks for tuning into this episode of Juicy Gems. Make sure to subscribe so you don't miss out on any future episodes. Also, visit juicytrades.org and join the trading community for live training videos, trade alters, or start training with the Learn, Grow, Profit Trader training program. That's juicytrades.org.